Welcome to Bloomberg Law. I'm Pacchia. After a spate of accounting scandals involving Chinese companies listed on American exchanges, regulators from the United States and China met last week to review a new set of rules. Joining me now to discuss is Rori Cassirer. She's the managing partner of the law firm Troutman Sanders based here in New York. She's fresh off a trip from China. Welcome. Good to see you.
Thanks.
This is a major undertaking. This is a big deal. We have 24 Chinese companies listed in the United States. They've been suspended from exchanges due to accounting irregularities. The SEC now wants to have ability to investigate something like 110 Chinese auditors. How is this going to come off? There's no template for doing something like this.
I don't know how it's going to come off. That's the short answer. The long answer is that it's been an issue for a long time. The SEC has wanted to have the ability to not just regulate, but at least inspect and have some way of looking at work papers of these auditing firms, because American auditing firms, for example, the Big Four, have to affiliate with a Chinese local company in order to perform audits in China. And so far, the Chinese regulators have been reluctant to give them that ability.
Why have they been so reluctant?
It's really a sovereignty issue. They don't want to have the SEC embroiled in their business, just as the SEC theoretically doesn't want the Chinese regulators to come into the United States, although the SEC has agreed that if they can look at the Chinese company audits, they'll be willing to give Chinese regulators the ability to look at American company audits listed on the Chinese exchanges. Now, of course, just to add a coda to that, there are no American companies listed on Chinese exchanges yet, although that's coming.
Now, the recent round of scandals we've just seen with Sino-Forest and other companies, it seems to have, at least from an outsider's perspective, changed the perspective of Chinese regulators. Is there any truth to that? And when you were over in China, what is the tone of how they consider these issues?
Well, when I was over in China, we probably spoke to about 200 to 300 potential investors and Chinese companies looking for capital. And the tone was worried. There's a lot of anxiety. The companies which are looking for American capital and capital abroad are generally smaller companies which don't have a huge track record, but they're not quite startups. And the tone is the Chinese regulators have to do something. They have to bend. They have to accommodate the SEC, because this is a really good place for Chinese companies to get capital. Whether it's in the United States, whether it's in Hong Kong, whether it's in Singapore, there's got to be some confidence in the integrity of the Chinese accounting system. So the feeling is they'll do something.
So when we get to a deal, is it going to be, in your opinion, something that's partitioned off? Is it going to be access to everything that the United States regulators want, or is it going to be a piecemeal approach? How is this going to play out?
My guess is that there's going to be a transition period with a piecemeal approach. Perhaps China will give the SEC, or at least the Public Company Accounting Oversight Board, access to the work papers of the Chinese auditing companies in connection with the limited number of Chinese companies doing business or listed only in the United States, because that's not regulated by the Chinese. I don't think it'll be a wholesale dump. In other words, I don't think that the SEC will get total contact and total immersion in these companies.
The regulators in China have often said, look, you can't have access to this type of information. It's a state secret. So are we going to see a partitioned approach along the lines of sectors and industries? Certain things are going to be exempt, maybe perhaps defense firms?
It's hard to say. I think they will create certain categories where they'll allow access, and they'll keep access away in other categories. And my guess is that if there's no confidence in the categories where they do stay away, where they don't give the SEC access, there won't be much American investment in those sectors.
Let's talk about reverse mergers.
Okay.
They have been picked up in almost every article I've read on this topic. What are reverse mergers, and why are they germane to talking about regulating Chinese companies' trade in the U.S.?
A reverse merger is where a private company acquires a publicly held shell and then issues shares or raises money, financing. It's a financing mechanism or a going public mechanism. It's generally perceived as a shortcut. It's a faster and cheaper way to go public. It's gotten a bum rap because there have been a lot of promoters who've kind of manipulated numbers, who may not have been as upfront as they should have been. The SEC is actually investigating promoters as well as auditing firms, which brought some of these companies public through a reverse merger. It's not a bad way to go public. It's just that it's gotten a bum rap because probably the majority of the firms that have gotten into trouble have gone public through the reverse merger process. Now, the SEC has actually imposed certain other requirements now, so that hopefully,
as a result of
this, and from what I hear, they've actually allowed certain companies through the pipeline who may go public through that mechanism again, but again with the more stringent standards.
This is really interesting to take a step back and look at it from at least the geopolitical perspective. It puts Chinese regulators in a bind. If they want Chinese companies traded on American exchanges or other exchanges around the world, they need to follow similar disclosure practices. That's not usually how the Chinese government operates. This marks a departure. How do you expect this to be handled?
Well, I think the Chinese government has been very adept at separating their political agendas from their economic agendas. So that if you go to China, it's totally capitalistic in terms of the economy. Politically, it's a different story. So I think they'll find a way to reconcile this. I don't know how, but the fact that they've actually had meetings, and the SEC's been over there, as has been the PCAOB, and talked, and there's some progress in the talks, there's a great demand for it. I think they will find a way. They have to.
Right. Now, jumping to the United States side of the equation, the SEC appears to be building a pretty interesting template. Is this approach going to be put to use in the United States dealing with other countries? Are we going to see them now turn around to regulators in, say, India or Brazil and ask for similar privileges of access?
I think they will. And I think that those countries will seek some sort of reciprocity, which is probably why, as each of these emerging markets creates its own stock exchange and creates its own capital that wants to invest in the United States, you will have ways of dealing with it.
So the SEC's job has just gotten exponentially larger.
It's
Where
amazing,
on earth are they going to find all these attorneys to do all this work?
Well, I think there are a lot of attorneys around. We just have to have the budget to hire. The SEC has to have the budget to hire them.
Well, we'll have to put them to work. Rori, thanks so much for stopping by. Always a pleasure.
Thank you, Lee. It's been great being here.
That's Rori Cassirer. She's the managing partner of Troutman Sanders, based here in New York. If you'd like to learn more about the cases or issues we just discussed, go check out our offerings on BloombergLaw.com and also on the Bloomberg Terminal. I'm Lee Pacchia. Thanks for watching.